Hello, everyone. So, a triple point venture growth is a buy or sell. Before I go into the details, please subscribe if you have not done so and click the like after you watch the video. You will really be very helpful to me. And you can write any comments or feedback if you have any questions. And also, I will hope you will have been following me. If you have not done so, you'll be following going forward about my video. I actually propose, the recap almost every day, the best I can in the morning. I tell you what's going on in the yesterday market and what's coming up the first day, and also tell you give you some insight about what stock to buy going for in future. Also, I post some video already to talk about whether Citigroup is a buy or sell, whether Nike is a buy or sell, and some of the stock that I've invested recently on my previous video. If you have not checked them out, please go do so. So this year, as many of you know that in the market, IPO has been very bullish. There's a lot of company over 100 company actually have went into IPO today. What is IPO? IPO is initial public offering, meaning that there were firms or equity companies that have been in private and go to public, and you were able to trade in the stock market. And you, as an investor, you are part of owning the companies, and you can vote for the board of directors that managing the companies and so on. And the company will offer dividend that you collected if based on the schedules and agreed amount. And of course, board of director can also vote for different things to how to run and operate their business. So you will be part of the owner if this company go to public and you own the share of the company. So how did they actually do fundraising? So a lot of these companies, when they're very small, they're really great idea, and they need actually venture capitalists or capital, to invest into the company continue growth. So some of the company that actually reason of doing called special purpose company SPC. You probably heard of that. It actually kind of help to facilitating the management of shares, stock preparation and shares, and buy and sell and find right players into the sake of that space. So this company, Triple Point Venture Growth, I seen a really great opportunity because of the upcoming more IPO going to come in the future that probably going to be trained going forward, and that's how the U.S. market or probably the world stock market going to get bigger and bigger. So let me tell you what TPVG this company is. It is actually this company. It helps to kind of landing with warrants to venture the growth stage company used in technology, life sciences. So the price have ranged this year from 280 to 14.50, and now currently trading around $13. It's actually a pretty interesting company. Most of them they have what they done is they actually will look into the opportunity of the company, which is kind of business case before they actually loan them operate and help them with the money and funding and continue to expand their operations. They also would in return will get some securities or secure assets so that can minimize the risk of this own company if the thing's not working out the way as planned. So what I like about this company, again, the key thing is I look for a company that normally has to have a positive profit. Earning per share is $1.21, which is not very bad at all. They have a really great profit margin. Again, this is not a very big company, and is consistently have beat the estimates, which you can see on here. In earnings from 2016 all the way to 2020, you can see the green arrow, which they have consistent beating estimate. And the last one, they actually beat 6.75%. So very solid. And the operating earning yield has 16.6%, which is above 98% of other benchmarking company. It is indicating that the stock is actually currently undervalued. And again, it has a really good PE ratio as well, price earning ratio. So this is another one factor to consider, 10.84, which is not very high. and the operating cash flow has significantly improving, uh, which has significantly improved over the period of time. So with net income, with increase of net income 263.9% compared to same quarter last year. That is really the key there, that they have a really great growth and actually have a good cash flow management. So let's talk about something I don't like and not a little bit weaker. Is this is again, it's not a very large capital company, but for a lot of companies, bear in mind this type of servicing company, which actually is more like a shell and nutshell, that have facilitating and go and finding people for money to help managing the funding through the cycle of this, these company like Airbnb or whatever, to grow into eventually become go public. You don't really need a lot of staff. You don't really need a big companies. So that's why the scale could be a little bit smaller. The market capitalization is only $408 million. And also, if despite the company have grown quite a bit, it's still down 7% for a year. And then we return on equity still have some room for improvement. Even $1.50 to $2, from $1.50 that forecast to $2.17 the following year in a good pace of 12 months period. It still seems to be the growth is not that, it could be probably doing better than that. So so this is just the area what I don't like about them, that they can have potential improvement. So if we can get into it again, the PE ratio is good. The price book is very fair, is a 1. Very good price, is not overpriced. Net profit margin is really high, 38%, just like I pointed out earlier. And it has the growth is a little bit lagging, not as strong as you would like. That's the only thing that kind of pull back. And on the return on equity, is compared to industry a little bit, it's positive, and I would like to see it in a double digit, which means with the growth, and the potential can get there. The analyst reporting again, PE ratio is much better than the industry and also S&P 500. The revenue have been growing, doing pretty well. If you look at it, the 3-year cost is 20.36, and net income, again, this is not a very big company, so but the percentage have been growing significantly over last quarter comparison. And earning per share, as you can see the figures there. So from a technical perspective though, this is actually very bullish to start right now at a buy. And that actually have inside the 11 people also bought this own stock. So this is one reason why I also recommended to buy in it. And you can see the technical piece of it. I ran some analysis on it. Okay, so the target of the price is $15.13. So currently now at $13. So you can think about, you still have $2. Divided by 13, you still have 15% opportunity there, which is not bad, right? And it could be actually go more than that. $15 is a little bit conservative. It all depends on the project and company they're working through, whether they can successfully launching the IPO for 2021 this year and 2022. Okay, I hope you liked the video. And again, if you have any comments or questions, feel free to jot it down there. I will get back to you. Thank you. I hope you have a wonderful new year. In 2021 will be even a better year for you. Life will back to normal, and everybody will be cherished and be able to go out and do some real stuff. And this type of company will continue to drive in the growth of the market.